wild. Sometimes Forex trading is a wild and woolly place to be. That's why Hugh's here, to pose your questions to Walter, the naked Forex guy. Hugh's got questions, and Walter's got the answers. Here at the Truth About FX podcast.
Hey, Walter, somebody asked, how do I know which direction the market is likely to go?
Well, I think it turns out one of the best predictors is who wins the Super Bowl, right? that was one of those things.
Yeah, or if you have a fish or something, right?
Yeah, or you can just follow the cockroaches on the wall and see which way they're going. Yeah. No, all jokes aside, we don't know. Obviously, we don't know. And the best traders in the world, they don't know and they don't care. They just wait for the market to go. So probably a more important thing to look at is, how do you know how to manage your trade once you're in one? Because there's a couple of questions here. One is predicting the market, which is kind of a loser's game in my opinion. But the second thing is, how do I know what's going on when I'm in a trade? Now, if you don't have a hard and fast trailing exit or targets or rules around there, then you're going to be kind of at the whims of emotion, which is probably not the best place to be. But one simple trick that you can adopt, and everyone can adopt listening to this, when you're in a trade, what you might do is, so before you're in a trade, you need to have the mindset that everything, it's like a court case and you're the judge. Everything needs to line up. You need to have enough evidence to say, okay, yes, you are innocent or you're guilty, buy or sell. And, once you get that, that's great. But then as soon as you're in the trade, your mindset shifts to, how quickly do I defend this position? In other words, when it goes in my favor, how quickly do I move to break even? I do it really quickly because I like to have trades that end up as break even. I've considered a lot of those could have been losers, and I saved myself. Now, some of them, like in fact this week, I had one where, well, it was last week, but it was managed this week. And what happened was the trade was stopped out at break even for me, but a lot of people in the private forum who held it, they made money because it just barely hit my break even entry, and then it went to target 1 and target 2. So the important thing here is, number one, you're not going to have to predict. You don't have to predict. You don't have to predict where the market's going to go to make money. And number two is, you should have a mindset of, I really don't want to take a trade, but if everything lines up and my system's telling me to take a trade, then I take a trade. And then once you're in the position, it should be something, in my estimation, it should be something along the lines of defending. You kind of go to defense, where everything you do is geared toward defending that trade, making sure it doesn't turn into a loser, making sure that you get out of it when you should. Everything goes towards defending it and not trying to be too aggressive. So I hope that makes sense. It's kind of like you want every reason not to take a trade before you're in the trade, and then when you're in the trade, you kind of want every reason to make sure that you don't let it turn into something bad, like a losing trade, or something where you just wait too long. These sorts of things. Now, if that's part of your system, if you have a trailing exit, you don't have to worry about that, right? Because a trailing exit will pop you out. And if you're using MetaTrader or any other sort of charting program like TradeStation or whatever, you can have that on your chart and you don't have to worry about it. You can let all of that go. One of the smartest things I've ever heard in terms of trade management was our friend James, and he was talking about how he might have 2% risk on a trade. And I've tested this. It's really cool. You split up into 4 positions. So what I usually do is I'll have 2 positions or 3 positions, each with more aggressive target. So the first target might be 1-to-1. The second one might be 2.5-to-1. And the last one might be 4-to-1, something like that. Well, what he does is he'll have one that's 1-to-1, one that's 2-to-1. Okay, so that's 1% of the 2% trade. Then he'll have one that has a trailing exit, and then he'll have one that's almost like pyramids into it, and you add more positions as it goes stronger in your favor, but it could stop out at break even at any point. So that's a really kind of a smart way to do it. And I think that a lot of traders, it would make sense for a lot of traders to test something along those lines. It doesn't have to be all 4 of those, but you might pick and choose some of those and see if that makes sense for you, because we're always going to kick ourselves when the trade goes further than our target, and we're always going to kick ourselves when the trade goes almost to our target. but doesn't get us out. And in both of those cases, a trailing exit can help. So that's something to think about.
Oh yeah, totally. I think those are great points. And also, it's important to remember that you could be right about the direction, but depending on your trading system, you could lose money, right?
Exactly. Yeah, that's right. And that's the importance of stops. Like, we know that having a really tight stop is going to reduce your win rate because of exactly what you just said. You could be right that the euro is going to go up. You could buy the euro. You could have everything set up. The euro is going to go for 600 for the next 2 weeks. All that could be right. But if you have something wrong, like your stop loss is 12 pips, it doesn't matter, that sort of thing. Yeah.
Mm-hmm. Okay, cool. Well, I appreciate that. That's a great way to think about it, like defending your position. That's awesome.
Thanks.
Thanks, Walter.